It's not an immediate process. It takes time. Like I said, your credit report reflects your behavior across years. It's just about playing the long game, making sure that you're making your savings, paying things off on time, and research, find out what the best rates are. And by that point, you'll have prepared yourself and set yourself for success.
In terms of credit, this is a term that I think a lot of people hear and perhaps don't really understand what it means. What is a credit score? Why does my landlord need it? Why perhaps do banks need it when assessing my financial health? And truth be told, going to school in the 90s, there was no financial literacy course. Even attending university, these aren't topics that were widely disseminated. I had to educate myself. So to viewers who aren't aware of what it means to have a good credit score, if you could just give an overview of why it's important to have a good credit score.
Yeah, so if you put yourself in the position of a bank or a mortgage lender or anyone that really, even your friend that wants to lend you money, I think it's important that, maybe not your friend, but if you need to provide money to a stranger, you need to have a record of how credible they are in terms of paying off their debts. What does their history look like? Are they falling behind in payments? Are they not meeting their phone bills, which is oddly reported on the credit report? But if you do pay it in time, it doesn't actually add to your credit score. And generally, your repayment and borrowing history across time. These are important factors that determine what you do get access to. So the credit score is essentially a number that takes in different factors, such as your utilization ratio, which I touched on before, which is essentially the percentage of available credit. So if you have 3 credit cards worth $2,000 each, the percentage of the $6,000 of available credit that you have that is used up at any point in time, that usually needs to be under 35% of utilization. That's a big factor that is taken into account. Missed payments and missed bills. That's another factor that's taken into account. So in Canada today, we have Equifax and TransUnion. Those are the 2 credit bureaus. And essentially what they do is they are the collector, compiler, and disseminator of each Canadian's credit score and financial history. So it is important that, you know that the credit report does exist. I think many people do know that a credit score does exist out there. Understand where you can track your credit score. Have a look at your credit history. We see a lot of customers that open up an account with us and can't recall or place specific items that they see there. You go to a store, for example, they provide you with an in-store credit card. You take it up because you don't really know what the implications are. And, you get discounts for products that you buy. You use up the card, and let's say you run into a bit of debt or you leave it at maxed out capacity. You forget about it. A couple of years down the line, it shows up in your credit report and it's a blemish. So those are the factors involved. And it's crucial that you have a pulse on your credit score and how it changes over time.
Exactly. And I know that one of the things that you've spoken about is that MyMarble helps customers improve their credit score. Since we have you here, we'd love to hear some of your tips of how our viewers can improve their credit scores.
One of the really cool conversations I've had with parents is around co-signing their children on cards they have so that, the parents' payment history translates to their child. And, when they are of age where they're earning their own income and are looking for kinds of financing, they're already starting off on the best footing available. So if you do have kids, you can try and co-sign them on your credit cards. I think the age cutoffs vary from company to company. Generally, it starts at 16 as the minimum age of the child that you can co-sign on your accounts. And then from then on, the next important thing for you to do is have a pulse on your credit score. There's tons of resources out there like MyMarble where you can log in and have a look at what your score is, have a complete listing of your credit report. Credit reports are not the easiest things to read through. There's a lot of markings and numbers, and it's structured in a very methodical way. We have the resources that will help you understand what each of those numbers mean and what the status of your current financial health is. And there might be some cleanup that you need to do. Credit reporting agencies are not perfect entities. It's not a perfect society. There might be payments that are reported as missed that are not entirely missed. There might be any kind of information on there that needs to be corrected. So you'll need to scan through, have a look at what needs to be changed. And then once you have your bearings ready, the only way to build credit, and this is kind of the catch-22, is to take up more financing, more debt. If you are in prime standing, the best rates are with top tier credit cards with the major banking institutions. An alternative to this, if you want to take a more conservative approach, is to get a secured credit card. What essentially that is, it's like a prepaid credit card where you have to put money into the card before you use it, and you cannot use more than you have put into the card. So this is an excellent way to live within your means and still build your credit scores. And what you want to do is, even once you obtain these kinds of financing, you can get, 2 to 3 cards, maximum secured cards, or even a loan if there's something that you can buy outright, but you can finance and you can afford the payments. That would be a great way to reflect that you can pay off your obligations and build your credit score. And then, at that point, it comes to managing the existing accounts that you have with things like utilization ratio, budgeting your money, looking at what your income is, what can you spend, and making sure that you're making payments in time. There's so many things you can consider. For example, there's a reporting date for each of the credit cards that you have. So the best date to make a payment to reduce the balance in the card before the card companies report that balance to the credit bureaus because, Scotiabank, RBC, every month they report that data back to TransUnion and Equifax. So knowing what that reporting date on the card is allows you to be in a good position to know when and who to pay. And from then on, it's not an immediate process. It takes time. Like I said, your credit report reflects your behavior across years. It's just about playing the long game, making sure that you're making your savings, paying things off on time. And whenever you're ready to make a big purchase, mortgages, car loans, research, find out what the best rates are. And by that point, you'll have prepared yourself and set yourself for success.